The views and opinions provided on this show are for informational purposes only and should not be misinterpreted as an offer to buy or sell any securities or to make or consider any investment or course of action. For more information, please go to passiveinvestorshow.com.
Are you a busy professional looking to diversify your portfolio? Ever wanted to passively invest in real estate but don't know where to start? John Fortes provides you with a guide to passively invest in real estate. This is the Passive Investor Show.
And now, the Passive Investor Show. Here's your host, John Fortes.
Welcome, PI listeners, to the Passive Investor Show. I'm the Passive Investor Consultant, John Fortes, your host of the only ranked podcast for passive investors in multifamily syndication. Our goal and purpose of this show is to be a resource to passive investors and help them master their passive investments by beating inflation 1% at a time. Quick hitter. 3 things to get started with passive investing. I often get asked questions, how do I get started with passive investing? I'm too busy to do this. I don't want to be the landlord. I essentially want to work with partners that are really, really good at the operational aspect of multifamily investing. How do I invest passively? Well, congratulations. You're taking the first step, and by asking those questions, you're setting yourself up for success, right? So you got to ask yourself questions to get the answers, and then you start exploring the possibilities. You got to have the investor confidence. Number 1 is investor confidence. We all know we want to invest. We all land on the investment strategy we want, and in this case, it's real estate. And then how do we go from there? So you got to have that confidence to land on that and then start pursuing it. And one of those is simply asking those questions. How do I get started? How do I go about it? How do I build my criteria? It's just different things because we all understand the 5 principles of real estate investment, right? So you get paid by appreciation, cash flow, loan pay down, tax benefits, and inflation hedge. When you understand that, it's a little bit easier to taking the plunge with investing. There's number 2. You have to start preparing and exploring. Build your criteria. What does an investment look like that you're ready to fund, right? So what are you looking for in an investment to be a part of? Is it an emerging market, population growth? What is your baseline for an investment? Cash on cash return, IRR. To me, IRR isn't my focal point, but it is to some investors. Annual rate of return, wealth preservation, or even yield investment. For me, number 1 personal goal for me is I'm trying to beat inflation. Because if I'm not moving my capital, my money is losing value daily, yearly, weekly, however you want to put it. So the way I do it is, hey, real estate investors, did you know that you can invest in real estate with your 401k or IRA? Through NewView Trust Company, you don't have to worry about the volatile stock market to make smart money moves. NewView has a free self-directed IRA guide you can get right now. That's right, PI listeners. I said right now. Go to newviewtrust.com to get your hands on it and learn more. Since their founding, NewView Trust has strived to provide clients with the broadest possible choices in their IRAs. So head to newviewtrust.com to download their free guide that could help you invest your retirement account in real estate and much more. That's NUVIEW trust.com. newviewtrust.com. The more you know, the more we grow. Happy investing. First, I start with, how do I beat inflation? My goal is to hedge against inflation, as you heard earlier, 1% at a time. From there, I look for not cash on cash. I look for cash flow. What can I cash flow? I'm just trying to beat inflation. And will this investment beat inflation? Usually it is through some sort of natural appreciation. I don't look for forced appreciation. If that's part of the plan, great. That's a plus. But any metric outside of that is basically a win for me. Cash on cash. Yep. I don't really put a number on it. Sometimes I don't mind 5%. Sometimes I want 8%. It's not so much. The IRR is just a metric to determine how fast your capital is being paid back. So usually investments are 5, 7, 10 years. How fast can I see that back? 5, 7, 10 years. Now, if there is a capital event in the middle of that happens, not by pre-calculations, because I don't like to invest in deals knowing that it's going to those numbers are relying on a refinance, AKA a capital event in the middle of the deal for it to hit those target numbers at the end. That's one deal I don't personally invest in. I look for 5 years. Okay. You're saying we'll get these returns projected in the scope of those 5 years without a capital event. Great. I'm highly motivated to invest in those type of deals than I am saying, you're basically saying we're going to refinance in year 2 and then I'll have all my capital back and then we'll just go forward and all of that. Knowing how markets can change, I don't want my deal that I'm investing in to rely on that for my cash on cash return and target numbers and IRR. So that's why IRR is less value to me. Yes, it's great to know when I'm getting my capital back, but I'm not in a rush as long as I'm keeping it moving. My goal is to constantly keep cash growing and moving and out there working for me. Then you got to understand, as part 2 is prepare and explore, is you got to understand what your risk tolerance is. Me personally, singles and doubles. I'm not trying to hit triples and home runs. I'm not swinging for the fences. I am swinging for average. This is a baseball analogy, which is swinging for average on your investments. And however that looks like for you, great. For me, I will take a single all day, every day, because I know I'm beating inflation. I know certain metrics are going to be reached. Number 3, the 3 things to get started. So we touched on investor confidence, and then we moved on to prepare and explore. Number 3, networking. Get out there, network with sponsors, reach out to sponsors and see if they meet your criteria as you are vetting them. Start reviewing investment opportunities. Trust yourself in your education. Continue to learn the game, learn the business, learn the philosophies at your own pace. Be comfortable. Once a first-time investor gains access to our investor portal, I tell them to sit out the first investment opportunity or 2. Get familiar with the process or even ask questions. But if they are comfortable, feel free to invest. That's all I say. I say go at your own pace because yeah, we're all running our individual race. And I am a runner. I run outside. I love running in the heat, especially. When I do run races, I usually sign up for 10Ks. And when I do, it is easy to get caught up in matching footstep for footstep in a race with someone in front of me or next. It's easy because they're setting a tempo. I have to remind myself to set my own tempo, run your race. It's constant self-talk. And I tell people that with investment, invest at your own pace. And that's it. So that's the 3 ways to get started in passive investing: investor confidence, prepare and explore, and networking. Get out there, put yourself in the game, continue to do what you're doing. And that's how we grow. Because like we used to say on the show, the more we know, the more we grow. PI listeners, thank you for listening. As always, we hope this was the best resource for your investment strategy, but also the best use of your time. As much as it pains us to leave you, but you know what time it is. Time to go put this into practice. Till the next time we meet. Happy investing. PI listeners, I'm grateful for your time and I appreciate you for listening. It would mean the world to me if you went to iTunes and left a rating and written review. Let me know how you feel about the show. It really makes a big difference with getting the podcast out there. Don't forget about our Facebook group, where all of our guests are members of. I'll be there to answer any of your questions, or even questions you might have for future guests. Subscribe so you can get the latest episodes and our fan favorite quick hitters. Finally, I want to keep you updated, so head over to johnfortes.com and sign up for the newsletter. If you're interested in partnering with me, sign up on the contact page so you can talk to me directly. I look forward to connecting with you. Happy investing.